Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 9th of August, 2018. And this is the final of a two-part video highlighting what we believe will be the influences on the gold price for the remainder of 2018 and where we predict prices will end up at the end of the year. Part 1 was published 2 days ago, on Tuesday. And we strongly recommend that you listen to it before proceeding with this one. On Tuesday, we stated that at the time of publishing, gold prices stood at $1,212 an ounce. They currently stand at the same level today. Some 4% or $48 down on exactly a year ago, and down some 8% or $100 lower since the start of 2018. In 2018, prices oscillated between about $1,312 and $1,360 per ounce, a margin of just 4%, compared with 2017, where we saw a price swing from a low of $1,151 to a high of $1,350, a margin of 13% swing. And the price of gold actually rose that year by a very respectable $145 or 12.65%. We highlighted that there were 6 major influences on the gold investment market, which were 1. Geopolitical issues, 2. Interest rates, 3. Price manipulation, 4. Internal US politics, 5. Traditional supply and demand, and 6. Alternative investment opportunities, especially the equity markets and cryptocurrencies, with particular reference to Bitcoin. Bearing in mind that equities gained 20% or more, and Bitcoin over 100% in the last 12 months. We concluded the video by asking the questions: has gold actually bottomed out in US dollar terms? Is the only direction from here up? And what is going to happen to gold prices in 2018? Before we answer those questions, let's just take a brief look at the levels some investment houses, banks, and so-called experts in this area have predicted would be the gold price in 2018. Jim Rickards, ex-CIA macroeconomic advisor, published in his book, quote, "The New Case for Gold," unquote, that gold could potentially hit $10,000 this year. In fact, he said as early as January 2018, as gold would be necessary as a, quote, linchpin of the global economy, unquote. And a new kind of gold standard would be required as an, quote, answer to US dollar stability, unquote. We haven't seen that as yet, but there is still time, we guess. Scotiabank has predicted that gold would average $1,300 in 2018. Bank of America Merrill Lynch believes it will rest around $1,326 by the end of the year. Bank of China International predicts $1,400 gold by the year end. Commerzbank $1,500 by year end. The Economy Forecast Agency predicts a 2018 close at just $1,023. Jim Sinclair, $10,000 by year end. Thomson Reuters have predicted as late as May this year that gold will average $1,360 an ounce and could potentially touch $1,500. JP Morgan lowered their forecast in June this year by 4 to 5% to an average gold price of $1,355, with similar figures from Goldman Sachs. Danske Bank forecasts a gold price of $1,250 in the fourth quarter of this year. Commerzbank predicts gold will touch $1,400 by year end, whilst the World Bank predicts that both gold and silver prices have already reached their peak for the year. So with such a diversity of views ranging from $1,023 to $1,500 by serious analysts, and a price as high as $10,000 by those needing to sell books and reports, how can anyone give anything like an accurate forecast? Well, no one can precisely predict the future. However, one can make educated assessments and attempt to factor in various influences which could impact prices. We are confident that the end of the year will see political turmoil until at least the US elections are complete. This uncertainty is likely to push gold prices higher, and the outcome will no doubt have an influence in either direction. We are mindful that President Trump may indeed push for further tax cuts, which, if successful, would be positive for equity markets and perhaps negative for gold. However, his tenuous relationship with North Korea and Iran, and with Mueller still to report, there is certainly a reasonable chance that gold prices will be positively affected here. However, we must also consider a possible rebalancing of Chinese foreign exchange reserves, a rising oil price impact, and a potentially weakening dollar, which is something the President wishes to see to boost exports. We must also not preclude central bank buying, which we have not discussed so far. Technical indicators and simple things such as US scientists finding a Spanish galleon laden with treasure, mainly gold, worth up to $17 billion at the bottom of the Caribbean Sea, more than 300 years after it sank. And new seam discoveries can all have an impact, albeit perhaps small. The Gold Council has also recently announced that inflows into gold-backed ETFs are the lowest half-year investment flows since 2009. Hardly inspiring. Notwithstanding this, it is our assessment that we shall see gold dip below $1,200 shortly, and possibly touch as low as $1,150. But we'll end the year somewhere between $1,250 and $1,300, with gold perhaps potentially peaking at $1,400 in between. So we are somewhat more negative than many of the serious analysts, as we believe there will be further economic growth, tax cuts, and interest rate rises, but also believe that gold prices will bear up well, despite what traditionally would be negative gold price influences. So there we have it. What do you think? We shall be most interested to hear your views. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.